going to London was fun, although it was only 2 days. Now, I think I was there for a full day, but it was cool to meet you in person, right? Because we have each other on the screen, right? I always saw you on the screen, but now I get to meet you in person. What was the one thing that shocked you when you saw me in person?
It was definitely the height. I think it was the first thing I mentioned.
How tall he is, right?
Yeah. And it didn't help that he was wearing Alexander McQueen's. I wear those. Those are exact shoes I had on, but I wear them because then it gives me an extra couple of inches. But 6'4" with Alexander McQueen's is a giant. We were getting funny looks.
I think I might be 6'3.5", and then the Alexander McQueen's make me like a solid 6'4", But yeah, we were getting funny looks. We kind of ran through London. We did a lot. We met at the hotel right by the London Eye, great hotel. We went down to the financial district, which was unique. Walked around for like 30 minutes. Last minute, trying to find a place, and then we got some like dope spot at the something garden.
Sky Garden in the walkie-talkie building.
Sky Garden in the walkie-talkie building. Did a live stream with B-Roots, who, as always, ladies and gentlemen, who are joining us here today, is late, per usual. The Moon King always showing up late, but that's fine. I guess that's what he does. And we had a good stream. But yeah, London was good. Europe was fun, but it's good to be back. And I think we're going to be doing this stream consistently every single Thursday, 9 a.m. PST, the Crypto Kings, the two that show up on time, Jake Gagan and Ian Heinich, as well as the one that shows up whenever he wants to show up, B-Roots. We might have to start finding him for that. And Dominic Ryder, the CEO of VEMP. Dom, quick introduction for those that don't necessarily know you right now. Who are you? What do you do? And what is your mission here in the crypto space?
Ooh, what was my mission? That's a big one. So I'm Dom. I'm the CEO of Vempire DDAO. We are a layer 2 metaverse token. We're currently in the sandbox alpha season 3. What is the mission? Well, you're talking to 2021 centralization vanquisher of the year, as voted by HackerNoon. It's a real thing. Google it. But there we go. So yeah, well in Cult Guardian. I'm sure that they are in the comments already. But yeah, that's me before I go into too much detail and distract everybody from.
And mission is not even honestly what I meant. I actually wanted to. I think it's good for people to, because we're gonna have some pretty in-depth macro conversations. I think you and B-Roots share a lot of similarities. You and B-Roots share a lot of differences in terms of where you think the market might be going. So maybe give some people a little bit of a background, or just kind of where you came from, like your previous work, and why you do have a lot of education in finance.
So I was a stockbroker originally in City of London. I think we walked by my old offices. But I was a derivatives trader, so CFDs and spread betting here in the UK, which is like equivalent to futures in the US. And then after that, I joined a FTSE 100, which is like the Dow Jones of the UK, as a wealth manager, as an associate partner there. And then after that, I was in venture capital, investing into asset-backed businesses, which is sort of where Metaverse came in, that we would buy property-backed businesses and then invest in those to protect the capital. And Metaverse property, although it's a virtual asset, you are actually buying something that has a real asset backing rather than just code on the internet. So that is my financial background. So I like to think I got a pretty good grasp on where stuff is going. But B-Roots would disagree with some of the calls.
We'll have to. I just wanted to provide that information. Obviously, we won't do an introduction every single time, but we will be doing that. I just want people to understand, so they realize, like, hey, Dom knows what he's talking about. I've talked to Dom a lot. He's a good guy that I go to it for money advice. I also go to B-Roots too, which he just showed up. Should we bring him in, or should we punish him for being late? Always 4 minutes late, guys. But make sure to smash that like button if you're ready for B-Roots to come in. And before I bring him in, Ian just tweeted this out. Oh, I don't have my screen shared, but Ian tweeted out that we're going to be doing a ape of the day. Is that right, Ian? We have an ape of the day. You said last time we called it ape of the day, it was a 200,000 market cap, and it went to 85 million. Do we have another ape of the day coming live on the Jake Gagan show?
Yeah, Jake, I've been kind of full DJing lately and just trying to find these plays, man. We found Kramer, we found ETH 2.0, which is still running, and we also found Meme, which ran to a $2 million market cap from about 150. So we have found another ape of the day. My DMs are flooded, and it looks like a good one, man. It looks like it's gonna get people some serious X's, and we'll see, man. We're gonna have B-Roots drop it as he does so well. And yeah, I'm sorry I missed that stream with you guys on Thursday. I was under sedation, getting needles in me, but I'm recovered. I got my first workout today. I'm feeling good.
Let's go, baby. Well, the Moon King, B-Roots, is in. I think it's still give him his flower week. So I won't be wrecking B-Roots as I usually do, although I do have a bone to pick with him. I think you guys are going to agree with me. But without further ado, let's bring in the Moon King, who's still riding on his high horse. He makes one good call every blue moon. Let's bring him in. The Moon King. I am B-Roots.
Oh, Mr. O, you're not getting your mask back. What's going on, Mr. O? Wait a sec. Wait. Is that Dom? How can Dom be over there? Mr. O in here. B-Roots in here. Is Dom Mr. O or is B-Roots Mr. O? I don't know what's going on because it looks like I got more cult stuff in my room.
That's true. I must be Artorias.
What's going on, everybody? What's up? What's up? It's your boy. It's 5 o'clock somewhere. Who? B-Roots back at it again.
Damn, you know you're DJ.
With another video.
You know you're getting hard when you start drinking at 9 a.m. in the morning.
And when you're drinking at 9 a.m. in the morning, get ready to call an ape of the day. That is full DJ. I love it. Let's go.
We need green candles. B-Roots. So is that true? We have an ape of the day coming?
I think we can have an ape of the day. Why not? Absolutely.
Why not? Markets are shit. Things aren't looking good. So what way to help the degens? Ape of the day, baby. So we have that coming, guys. Make sure to smash the like button. We have a good show planned for today. I think the best place to start is with the latest CPI report that just came out earlier this morning. And you can see the crypto market is not responding very positively to this news here, but the U.S. inflation has fallen to 8.2% since 2022, the lowest since 2022, and we're seeing the markets actually tank. We saw the crypto market fall below 900 billion earlier today. So Dom, let me start with you. What are your thoughts on the CPI report that came out and the fact that inflation is falling and just the crypto market right now?
I think Watcher Guru has been pretty misleading there because it actually was double expectations month on month in terms of the prediction. So it came in very, very hot, which is why it immediately tanked. The NASDAQ dropped like 4% in about 1 minute. Since then, it's pumped all the way back up to being in the green. It's up 1%, back to where it started, just to make sure that it screws over everybody, stops out all the bulls, and then comes back out and stops out all the bears just to rub it in everyone's face. Max pain market. But yeah, I mean, it's not really the good news that tweet puts it out because September, like energy and all of the things that make up the predominant amount of CPI fell. So the fact it rose stayed flat technically, but beat expectations doesn't put us in good stead for next month because energy's up, like oil is up significantly because of the Saudis, because they gave one to Biden, sort of shafted him. So, I mean,
on that real quick, just so I want to stand that. What do you mean, oil with the Saudis and shafted Biden?
So essentially, Biden went on his little mission over to Saudi Arabia to try and hold off a cut in the production from OPEC Plus, and they put out a statement basically saying that they wouldn't be, in essence, like manipulating elections because, you know, why does he want to delay any cut? Because a cut means an increase in the price of oil, increase in the price of gas, therefore inflation higher. Biden looks bad ahead of the midterms, but that's all over now anyway, because the CPI did come in hot. So he looks bad anyway. But what's more concerning is the fact that they have what's called SPR, which is Strategic Petroleum Reserves, which Biden has been releasing to try and combat this and try and look good for the midterms for so long. So they've drained so much oil from, you know, what is like supposed to be the reserve for the military to fall back on should there be any emergencies. But essentially, they've drained so much of it, and now the Saudis have come out and cut production anyway. So they're going to have to buy it back so much higher than it was to get the same sort of reserves. And also they're not going to be draining it anymore, because once the midterms are out the way, like a typical politician, they don't care anymore. They only care until the next election. All the promises that they give, they'll just put back. So gas prices are going to head up, oil prices are going to head up, and 40% of CPI data is energy, food and shelter, which all of them have been running up by 10, 15% past month. So that's why I think the reaction today, the initial drop was correct, but then everyone over leveraged, and it's a proper short squeeze out there in the market now. So it's just how far the short squeeze goes. But yeah, it's not going to be a bullish CPI reading next month. And the problem is, it's a catch-22. Like, if equities are green, the dollar drops. If the dollar drops, oil goes up. If oil goes up, inflation goes up. Dollar gets stronger because they raise rates. Like, it's a cycle of just there's no way out of it. It's just a circle of pain, basically.
And it has been, and definitely look, you're using your history and education to see what's happening, right? You really dive into all the markets, and like, you look at the whole world view. You're looking at everything that's happening around the world, and you're like, this is all fucked. Like, we talked about it when I was in Europe. You're like, this is all fucked. Like, yes, they can probably print more money short term, but like, there is no way out at the end. Like, it's all gonna collapse and crash. Now, 𝗖𝗓𝗡𝗘𝗖𝗧, I'll take this to you. Same question. You're seeing the CPI report. We saw inflation go down to 8.2%. What's your thoughts on this?
I didn't know until you just told me.
Yep. Yeah. So right here.
Yeah. I mean, I knew earlier this morning, as you know, we talked about it, but I talked to Ian on the phone today. I woke up, we first thing we call each other. Boom.
That's cute.
The markets are shit. And I go, yeah, it's CPI day. So what they're going to do is they're going to run the markets down and freak everybody out, and all the Americans as they wake up and see the price going down, and it's going to run back up. And right now we're $900 up on Bitcoin from the time that I said that, which was about 2 hours ago. So what I'm trying to say is, it's manipulation in the size of Bitcoin and how they, run these charts and freak everybody out. Dom is 100% right in everything that he says and how he says it. I do agree with him on the macro side of it. I just know that the 1%ers and the big boys in America know how to try for the short term, not necessarily macro term, but the short term to medium term, to shake people out of their positions so that they can get more of it. I do think that governments do that. I think the Fed 100% does that. And in a most unregulated space known as the crypto industry, 1000% does that. So we're seeing red, we're seeing all of this, and everything that I've been saying since December 2021 is still holding true. Until it breaks the 300-week moving average, I will not budge on that.
Yeah, I mean, the thing is with whenever it's with macro and like price predictions, there's so many different views, and so many people can be right within the same time frame. As in, one thing that I've mentioned whenever I've spoken to anyone about this is that I just easily remain a seller of rallies and a never do anything depending on the trend. I will occasionally put a hedge at the very bottom of the market. For example, today I had a hedge on ahead of the data, because if it did go up, I did want to make sure that I wasn't just sitting there on the sidelines waiting for it, that I was going to get it. But obviously the hedge got stopped out. But then once we got down 3% in the NASDAQ, I took off like 25% of my shorts. Lo and behold, it's right back up again, and I put them back on today. And obviously I wouldn't have made that difference. That's probably like 5 figures in USD terms just from playing the swings. So that's where a lot of people will, it's just like the Maxi argument. If you only trade one thing and think one thing is going to go up or down or whatever, then you'll miss out on everything in between. And as long as you get the trend right and you aren't stupid with your leverage, then even if you are offside for a while, you will eventually be right. It's only if you get the trend wrong where you're really going to worry yourself. If you've overexposed yourself, then you can still lose money if you get the trend right. But as long as you're sensible, you leave space. If you are betting on it being a bear market, and it is a bear market, sure, you can get short squeezed, but as long as you're sensible, just hold. It's only if you get the trend wrong and you're stupid with your sizing that you can sort of really get screwed over. But this market is like, back when I was a derivatives trader, this is the best market because it's so volatile. Like the swings are obscene. It's a dangerous market, but volatility is money. You can trade a boring market, and if it's boring and going up, you'll make less money than you are just smashing the volatility. So this sort of market is full of opportunities.
Hey, Jake, we'll let Ian speak on that. Can I do a screen share real quick?
Yep. Go ahead and hit present.
Just for me, it's like, even with my limited knowledge of the markets and stuff, it just from watching the corruption and stuff, it's like whatever the narrative of the news is, it's almost like do the opposite. It just seems like even that day we talked on that 1 week, a couple of weeks ago, it's like, this is like all that FUD came out with the banks going under. You had Swiss Bank going under. You had the Deutsche Bank going under. A bunch of cryptocurrency coins came out with it. And it's like, this is going to be such a bad week. And the markets pumped that Monday. So it's like, I feel like there's so much like corruption. They're trying to, I mean, like 𝗖𝗓𝗧𝗛 said, like, I'm sure people are swing trading Bitcoin like crazy. They FUD it, it drops. You see it fly right back up. That's a 5% gain on millions of dollars they're putting in. They don't get that on stocks. So I mean, it just seems like it's the narrative. Oh, what's up, Dom?
I was in the chat like, where the heck did Dom go?
Like Dom didn't like my opinion.
Yeah, he's like, fuck no, Ian.
Yeah.
Ian, no.
You freaking UFC fighter, shut up.
But no, because it was and then it was at like, the market was at like 3,600, and then that Monday it pumped up to like, it rallied 6% in 2 days, and got to 3,800, and then it all just dropped again because the Bank of England came out and said it wasn't going to carry on. But again, I took some risk off at 3,600, and then I sold into 3,800 again, and it came off. But volatility is money in this market.
Absolutely.
And with like lower cap stuff, they don't follow the trend as much. Stuff that's also USDC or USDT paired doesn't have the same ETH volatility because Uniswap automatically rebalances against ETH pairs. So if ETH's dropping, then Uniswap will sell your token as like an AMM is automated market maker. So that's an automatic function for Uniswap. You can't stop it. So that's why you can make a lot more money with higher cap stuff. You can trade the swings, but if you focus lower cap, like even my venture capital chat where I'm in a group with like 200 VCs, like honestly, the amount of degen stuff that comes out in a bear market, like they are just as they're just as bad as all of us here in terms of what we call, what we go into. Like you'll be surprised how many like holders there are with just the craziest stuff. But the thing is, in this sort of market, VC backed coins, they pump, and then all the VCs, they sell their allocation on TGE, and then it goes all the way back down. You've got that constant stream of sell pressure. At least with like the meme token market, the 100% of the supply is out there. So the only pressure is from actual holders, not from private dumpers.
Right. So basically there's opportunity in any kind of market. I wouldn't do what you do and try to hedge up and down just because that takes years and years of experience. But I do believe there's always an opportunity. There's always that one coin or a couple coins that are pumping even when the markets are crashing.
Yeah, you guys found one, like proof of memes. You guys found proof of memes at 15K or whatever it was. You called it at 80K, and it rode all the way up to $80 million market cap. I didn't get in. I'm still wondering where the hell the 80 million came in from. That's insane. But all the way up to an $80 million market cap. So it's possible that can happen. 𝗖𝗓𝗧𝗛, you said that your screen is ready to share, but I'm looking at it and it looks like it's just a screen of us. So try to pull up the other screen. There you go. And we're going to go to 𝗖𝗓𝗧𝗛. And guys, make sure to smash that like button. You got Dom, 𝗖𝗓𝗧𝗛, Jake Gagan, Ian Heinich, the Crypto Kings, joined by the CEO of VEMP. Make sure to smash that like button, guys. It's free, and it helps push us up in the YouTube algorithm, which means more people are going to see the ape today. So smash that like button. Let's get into our segment, crypto classes with our professor, 𝗖𝗓𝗡𝗚𝗧.
So 300-week moving average. This is everything that I've been saying forever. Anytime you flirt around with the 300-week moving average, it's been accumulation time, and it's been that way since the 70s. This is the S&P 500. The blue line is the 300-week moving average. So everybody was talking about the 200-week moving average, and I was like, if you look at the 300-week moving average, if you kind of get close to it, anywhere from the 200 to 300-week, in my opinion, based off of the history of finances, you should be accumulating your favorite assets. That's simple. Sometimes we do dip under it, and that's why I say there's absolutely a possibility that the way Dom talks and thinks is like you should have, not financial advice, some money on the side just in case that scenario happens. But when it happens, it's quick. It's extremely fast. 1974, dip, boom, gets back over it. If you bought anywhere from here to here in the last, was that 6 years? Look what happened. It didn't touch the 300-week moving average until 2001.
2009, that was the crash, huh?
Yes,
financial
that's
crash.
Your financial crash.
2009,
but
right?
Here,
next one.
Hear it out. This is 2001, so I believe this is your internet bubble.
This was the internet one,
yeah, your internet boom or bust. But hear it out. If you bought all the way down there and it crashed down, and you just like taking profits, and then all of a sudden you see this crash, you hear all the news, blah 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 blah. Guess what? 300-week moving average. It dipped down there. So you had 1 year to get that. It went up again, a fake. So you'll get this. This is Bitcoin. This is like the Bitcoin top. It went up, crashed. Everyone thought it was doomsday. It was over. We're all going to hell. It's it. We're all going to die. It went up again, double top. Went down. Even if you bought right here and then a crash happened and you held your asset for 2 years after that happened, you didn't touch it again until COVID.
That was COVID. Look how quick that wick was, huh?
Look at that. Boom, 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 boom.
A couple days.
Now we're here. I talked about the 70s, and I'm looking at the 200, 300-week moving average. It is catching up fast to where we're at right now, which is 35, 36. If you saw my tweet from December, I said we're going back to 35 and 36, but I don't see us going any higher, any lower than that. If it happens, there's your 300-week moving average right there, 32, 33. So we're there. We're literally right there. So the time to accumulate, whatever you want to do, if you're trying to like time the bottom, like you might not get that. Now let me bring it back to Bitcoin. Bitcoin is a newer asset. So Bitcoin, I believe, where you have the traditional markets, they're going to do what they do with Bitcoin, but also do it. So do what they did on the SP 500. They're going to do the same thing with Bitcoin. And it took from 2008 to 2017 to finally get a 300-week moving average. What do you know? After the next bear market, the crash was actually this right here in 2018. Now, why do I not pay attention to the news? That crash during 2018 wasn't the end of the world. It was just a regular Bitcoin crash. But we went up and had a fake rally, and the world was going to end. Doomsday, we're going to die. It's over. Everyone's shut down. You can't travel anywhere. You can't go to work. Everyone's sick from the flu. Everyone's sick from the flu. Things are going down. And what happens? Crash, code crash. Guess what? It actually got front ran. It didn't even hit it. You see this little dot right here? It didn't even hit it. So what did that do for the 300-week moving average? Ooh, you didn't touch it to wait. Oh, why is B Roots talking about back in December, that we're going back down to the 300-week moving average way up here? I was talking about it. I said, we're going to the 300-week moving average. Everyone's going to talk about the 200-week moving average because that's how all the financial people go, blah, 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 blah. But it's really the 300-week moving average. We crashed all the way down to 17.5. And what do you know? It got front ran. Goes up, and it's just flirting with it. So I feel that until this goes down, then everyone was right. Okay, we break down, blah, blah, blah. Like, okay, the guys who are very bearish won. But based off of history that I've showed you with the S&P 500, based off the history of Bitcoin, it's telling you, no financial advice, it's time to start accumulating your favorite assets. Because what happens if it just does this? See ya.
Allow me to
and let me ask one thing. Let me ask one. Go ahead. Actually, let me ask this real quick. It'll be a little bit quicker, Dom. But I just feel like B Roots now is a different situation than we've ever had, right? Like we literally have the threat of nuclear war going on. We have hyperinflation. We have politicians in charge who are just printing and can't stop it. And I'm sure we had shit back in the day, but I just feel like
dude, there's always
yeah. We went to war. We went to Iraq, 9/11, the Twin Towers came down.
I get that, but I feel like nuclear war,
financial crisis, the world shut down in 2020.
Hiroshima.
What else can happen, Jake?
I don't know.
The world shut down.
Crazy man dropping a nuke like that. That's different than all these things.
That's
the world, bro. The world shut down.
You see the advertisement in New York preparing people for nuclear war. You see all the news about the government buying billions of dollars of radiation stuff. It's like, it's a little bit different. It's a little bit more serious.
You're watching the news too much, man.
There's nothing new under the sun.
They control you. You know why there's in the news, I'm gonna give you some alpha. I've told Ian this before. When you watch the news, you know why there's always like lights flashing?
Why?
News flash. You know what news flash means? You're being hypnotized. Look up the actual history behind that. You're literally being hypnotized when you're watching the news.
And real quick, I don't watch the news. I listened to Joe Rogan with 𝗖𝗧𝗛𝗧, great episode, highly recommend it. But they're talking about it. If Joe talks about it, it's real. Dom, you were going in. Hopefully, you didn't forget. I kind of interjected, but I wanted to give you the floor now. What are your thoughts with B Roots, the 300-week moving average, and the alpha that he presented? Agree or disagree?
Well, I've got a screen share of my own.
Hold up. Are you ready for it? And guys, this is why we like this. This is going to be one of the most educational streams. We got four crypto geniuses, although I'm not one. I'm joined by three of them, and we're going to have so much alpha. So please make sure to smash that like button, guys. Let's get more people in here before the ape of the day. Dom, are you ready for the screen share?
I'm ready.
3, 2, 1. Welcome back to Crypto Classes. I told you it's going to be a good debate with our teacher, Dominic Ryder. Here we go.
Right. Now, that's something that people don't even talk about in crypto, which is why I look at all areas of the market, not just crypto, not just equities or foreign exchange, but also bonds. And the good thing about history and technical analysis is predicting short, midterm trends. But what happens when history is completely flipped? So right now, everyone's talking about pension funds. They're talking about bonds, and they're talking about how everybody is getting liquidated. And there was articles that came out in Bloomberg that UK pension funds are asking their companies that they're actually providing services for loans. So why is this all happening? So effectively, since the great financial crisis, you've had low interest rates and the printing of money. And when you have low interest rates, you have very, very low bond yields, which is why right now you had the US Treasury at like 4.4 on the 2-year, 4.4% yield. You have 4% on the 10-year, on the 30-year. And in the UK, you had over 5%, Italy, 4.8%. So you don't have any of those and haven't had any of those since the financial crisis. So because of that, if you're a pension fund, in the UK particularly, if you have state pensions or defined benefit pensions, you are not allowed to invest in anything other than bonds, because you need to provide a consistent income and return to retirees, which means that you can't invest in equities because they swing around too much. But if you look at this chart right here, what happens when the rules change, when bonds swing too much? So it's only happened 5 times in 300 years, this chart. So, you know, this is proper black swan event. So it hasn't happened since the 1950s, but you have a 10-year period where every single pension fund has had to leverage all of their bonds to get yield, because with 0% interest rates, you know, and negative interest rates in the in Eurozone, how are you supposed to return retirees an income if you can't invest in equities? So you leverage it all up. And what happens when it blows up and goes wrong? You have all of this leveraged pension money getting absolutely liquidated, because the biggest drawdown in bonds for the past 50 years was minus 2.9%. This year, minus 29. It's 10 times worse than it's ever been for 50 years. And that means that the $17 trillion held in pensions are broke. The biggest buyers in the world do not have money to buy. And the Fed, they're not buying now either. So this is where records can be broken. And I'd say the very same about relying on any technical indicator is that they are only right until they are wrong. And it doesn't last forever, no matter what. There's great predictions, even the greatest recession indicator ever, the 2 to 10 year spread. Eventually that will be wrong. But this sort of black swan event in bonds is one thing. You also have the dollar at levels not seen. Dollar yen is at levels not seen since 1998, when you had an Asian financial crisis. The dollar is absolutely destroying everything. So you've got moves that you haven't seen in the foreign exchange market or the bond market for 50 years. And that breaks something, because there's somebody who has bet the wrong way. It's like with crypto, how many people get liquidated when you have such big moves? Now imagine that Bitcoin had only ever moved 3% for 50 years. Can you imagine how many people were super leveraged trading that just to have it drop minus 30? Like, the damage will be severe. And because it's so opaque and non-transparent, because it's centralized, we just don't know it yet. Somebody has royally messed up here, and somebody has been buying this all the way down and lost all of these retirees their money, because they're asking for bailouts from the Bank of England. That's why they had to step in. They're asking for bailouts from the government to go back on their spending plans. Somebody has inevitably bankrupted themselves, but we just don't know it yet. And that's the sort of thing that happens with Lehman. And when Lehman Brothers crashed in the great financial crisis, you know, the damage was done way before we found out. So this is why I'm saying that technical indicators are very, very good, but occasionally history will prove them wrong. And it's black swan moves that liquidate hedge funds and do stuff like that.
Go ahead, Roots.
Okay. So I like the history. I actually like that chart. I do like that chart. So it allowed me to go a little deeper on what I spoke about earlier, because in my opinion, what kind of I believe that made me successful and a lot of other people successful is to follow the money. You've always heard that term, follow the money. So the best way to do is, let's see what happened in 1869 in a 10-year period with those who had the money. Now, obviously, we can't do 1869 because the S&P wasn't around back then, so that's canceled. So we have a little bit information at 1929. Don't have information on that, so that's canceled. We do have 1953. So that same market, it never even touched the 300-week moving average. So there are actually worse events than the bond stuff, in my opinion, that actually made it go lower. And I think what we're on the same page, and I think we're all saying the same thing. How I look at it is, hey, audience, there's history in this 300-week moving average too, since literally the 1950s. And what it's telling you is to follow the money. And the money is telling you that if you pay attention to this, no matter what happens in the world, through history from 1950 all the way till now, the money is telling you what they are doing.
And pull up your chart if you want.
In my opinion, am I not on the chart?
No, you're not sharing.
Oh, sorry. I'm over here like showing and.
Well,
And I hear you clicking.
What I was
Yeah.
saying
So
before.
here you go. Okay. So
All right,
right here.
3, 2, 1.
Okay. So I'm going all the way back to 1950.
And then hit hide at the bottom. Sorry, I have OCD.
Okay. So here's 1959. It came no close. It got front ran and just kept going.
And sorry to interrupt. This is still the 300-week moving average, correct?
Yes, 300-week moving average.
Just for people that are watching.
This is, you can go histories and look at the wars. You can look at the shutting down the world. You can time it up with the 9/11, bonds, all that stuff. Like it shows you where you're correct, where the market downs. But I'm saying that the rich, the people that have money, you have to follow the money. And that's basically what I teach. And I tell people is follow the money. Maybe you didn't hit this right here. You didn't hit this bottom, but follow the money from 1950 all the way to now. All the cash, the crappy events, everything, the dead events tell you to follow the money. This is history in the macro since 1950. That's literally telling you follow the money, pay attention to the 300-week.
Well, that's where it goes back to what I mentioned earlier, as in we're saying the same thing.
Yeah.
Again, it's all about trend. If you are buying and accumulating long-term assets, then by all means, buying now, you will eventually be right. It's all about not overexposing yourself and having capacity for loss. As in, if you are not risking money that you need immediately, then if you get the long-term trend right, which tends to be up and has historically been up, as long as the whole world doesn't collapse and nobody, blows each other up, then eventually you will be correct. It all depends on what sort of term and horizon you're looking at. Because I have no doubt if somebody's goal is to average in and buy when prices are low with a long-term horizon, then I'm certain that you will be making money in even like a year or 2 years. Am I certain that you're getting the best price? No. But if you are buying long-term, I don't think the word long-term buy has ever been used on but yeah, certainly then we're definitely in the same boat. But yeah, I don't think that the bottom is in. I think that it's good value. I bought 30 something Ethereum earlier at 1,200, and it's back up to where's Ethereum right now?
13. Did it go back to 13?
1265.
1265. So there you go. What's that move? That's like 4 or 5% on like
not
13.
bad.
So it's like 3,000. The reason I bought it is not because I think Ethereum's bottomed. Like, absolutely not. It's just I know that it will probably bounce from here, and I can sell it higher, and then I think it will drop again, and then when it bounces, I'll buy more. And that's the game.
I think the main thing.
Can you start texting me this? Can you start saying, Jake, I'm going to buy Ethereum right now? Like, just a quick text before you do it next time.
I think in general that, hey, I know one thing that we do agree on is in the next bull run, take profits, learn from what you haven't done, take profits, because that scenario is going to come sooner or later. I do agree with that. Me personally, I think we have, one cycle left in us. before the gains really, the Wild West kind of really cuts down. I've said that multiple times. You know, I've been public with the tweets saying, hey, you're going to see me walk away one day. It's mainly because I see like the Wild West, you only got so many chances to do it. And I think the governments are coming. And when they come, those gains are just going to be like, blah, nothing. And you're just going to be like, what happened? And you're still going to be trying to degen and realizing that you're barely getting a 2x because everyone ran away. That time is, I do believe that time is coming. I don't think it's yet. I don't think it's going to be. I think we have another cycle on us, maybe 2. I know Ian doesn't want to hear that.
Ian wants.
It's like, give me 4 more cycles.
He wants 40, but I want to see this right here. So I want to see how this actually reflects. I haven't purchased a house yet. Obviously, it could be on my radar, but right here, breaking U.S. mortgage rates surge. Let me pull this up to 6.92%, the highest since 2002. What implications does this have on the markets, on the financial markets, on people? What does this mean for the everyday investors, people that own houses? Like what was the previous mortgage rates as well, if we know, like what were they near, and what does that mean?
Refinanced my house at a 2.6% the day of the COVID crash. I went to the bank and refinanced at 2.6.
Smart.
See, I raise you again. I see. It seems like I'm just trying to outdo you here, but I promise my mortgage rate I locked for 5 years at 1.92%.
Yeah, we didn't get that here at all.
And
definitely didn't get that.
But this is the thing. Like again, people. You know, I was talking about black swan events, right? So the last time mortgages were this high, 2002. So they didn't even. The last financial crisis was caused by collateralized debt obligations and mortgage-backed securities. So what that is in plain English is a bunch of individual consumers' debts all bundled up together and sold as an instrument to banks. And then they trade on it, they bet on it, and they make so many derivatives that it just turns into the normal financial mess, like so complicated that nobody ever sort of does anything. There's like there's an old saying that in banks, what you do with derivatives. So a derivative is a speculation on an asset without owning the asset. So you are just trading the price movement. You don't actually own what you're trading. And what that means is that if I write $1 million on a piece of paper and I give it to Ian, and Ian writes $1 million on a piece of paper and he gives it to me, we both charge each other 1% fees on our piece of paper with $1 million written on it. We then go to the IRS and we say, oh, we got $1 million on our books. But then the world crashes and the IRS says, can we have that million?
Wow.
And then they realize it's just a piece of paper with $1 million on it, because it's nothing actually, it doesn't exist. It's just speculation. It's just nothing there. And that's what happened with the great financial crisis, is that mortgage rates, again, inflation was running hot. The Fed was raising interest rates and it got to the point of 6.92%, where you're paying 50% more on your mortgage than you were before, and people default. And when they default on their loans, the banks don't earn the money and the lenders don't. So then the lenders fail. And then the lenders obviously have sold their debts to a bank, and that bank has sold their debts to another bank. And it's just a domino effect. And this is why I say, like, if I had to write a book of the worst financial situation ever, I would not be able to imagine just how many things are going wrong at the same time. Like right now, like the bonds is one thing, the FX moves are another. Property crisis hasn't even hit yet. That's like 6 months out. Rents are still going up because they are a lagging indicator. So this is where I say we're not bottom, because property hasn't even crashed yet. And if it is anywhere near as bad as the last time rates got this high, you know, banks do not learn their lessons. A whole generation of bankers has retired and been replaced by young, arrogant cocky graduates who are doing the exact same things they did before. Like, this is where it's so opaque that we just need to find out what's happening. I mean, if you Google it, you can find out, and you can track mortgage-backed securities delinquency rates live, and they are trending up. So more and more people are defaulting on their debt, and eventually somebody is going to come for the asset that is supposed to be backing those houses. But again, we've been in a low interest rate environment for so long. So everybody has been buying property because I've been able to buy it for 1.92%. As long as I return more than 2% on my cash, I am making money just from doing that. So every man and his dog has been buying investment properties because they can rent them out, and I can cover a 2% mortgage loan by just renting it out to somebody. But what happens when you can't do that? And now you have to pay 3 homes worth of mortgages, and nobody is wanting to rent from you because we're in a recession. And again, we haven't even seen the implications of that yet.
And what does that lead to? Like, let's say that happens, right? All these people are renting out the houses. People are getting laid off. Inflation's so high they can't pay their rents. Is that just a cataclysmic market crash where prices just go just plummet to the earth? Is that a good time to then buy?
Well, the housing market doesn't necessarily mean everything.
I'm talking about housing, the housing market. Yeah.
Oh yeah. I mean, that's what tends to happen is that the reason why house prices go down when interest rates go up is because where you could charge me $1 million for a house that I had to pay $2,000 a month as a mortgage. Now, if you try and sell me the same house, I have to pay $4,000 a month on that mortgage. So I'm not going to pay $1 million to have to pay twice the amount. So inevitably, that difference has to come from somewhere, and it comes from the value of the property. So in order to sell the house, people need much more incentive now to buy it because they've got paid double what they were a couple of years ago. So in order to get rid of the properties, they have to cut the prices. And they're building more houses than ever. The supply is going up, and it's going to end up inevitably dropping. But it's a lagging indicator 6 months out. Right now, in fact, in the latest CPI report, rents were still increasing. So we're not even like at the peak yet of any sort of rent increase, let alone the drop. And don't even get me started on the amount of car finance and other forms.
That's what I was going to go on.
Which has come up since great financial crisis.
One more on the housing though. On the housing, one more before we go.
It's going to be perfect timing, Jake. The bull
That's what I was going to ask. It's like,
you're going to be cashing out, buying houses.
Okay, that's my question. So don't buy now. The good time's coming to buy a house.
Yeah,
I want to go on a timeline with this. Let Dom go. Go. You finish.
I was going to say, yeah. As soon as there's a Fed pivot, the reason why, everyone, as soon as there's any indication that the Fed's going to stop hiking or start easing, the markets rally. And the reason why is as soon as they drop interest rates, it's just they're going to start inflating the bubble again. The exact reason why everything's blown up is because the Fed has been low interest rates, because people start spending and buying again, because we're back to the heyday of low interest rates. I can buy 7 houses, rent them out, and I earn tons of money. And that's done in those times. But yeah, as soon as banks and mortgage rates are reflective of interest rates set by the Fed, so as soon as they start cutting again, that will be reflected in the mortgage rates. But then people will probably start asking. But yes, there will be a midpoint where you've got still the lower house prices, and as soon as the Fed starts cutting rates, then you need to be going to the bank and the real estate agent and saying, I want to look for a property.
Perfect. Awesome. B-Roots, what were we going to say?
Yeah. It's a timeline thing, and everything's to me, it's happening in a cycle, and we're lined up. Bitcoin crypto is in my opinion, the best potential cycle that we can be for this situation. If you're watching this stream, you're likely in a better situation for the future if you play your cards right than the typical person out there just not paying attention to what's going on. I personally think that, and I've been saying a few times, that the auto market, I do believe the housing market is going to crash, but I think it's from the auto market and how America is giving out loans. And, you know, if this is your first time on the show, first time listening to me, I used to work heavily as the #1 BMW and Mercedes buyer in the country. I flew out to the largest auctions and bought cars, know the market of cars. I can tell you what a car is worth just like that. It was my job. It was reading charts. And that's kind of how crypto kind of came to me very easily, of just reading timelines and cycles and all that stuff. It came very easy to me. That market is going to crash. I'm letting you know the auto market is going to crash. And I do believe it is going to be the reason for the housing market crash. It's like a ricochet effect, like dominoes, like market crashes of the
I got it the other way around.
Of the auto market. In America, you can see with all the news that's going on is that people cannot get hirees for jobs, and then it's going to come to a point where they need to go to the jobs. But these interest rates, I'm telling you, when I left my job and quit and just went full-time crypto, 20% interest rates on cars. 20. That housing of 6%, like, people would love that, because people will go in during the COVID times when the prices of everything was skyrocketing. They would go in and like, for example, a 2017 BMW 3 Series that's worth literally like $17,000 US. I was buying them for 23 grand, and I was selling them in one day for 26 grand. And then the salesman would go in there and they would add all these other things to it, these gap insurances and all these other things. Now all of a sudden, 29 grand. But wait, the bank will allow you to get that 20% interest rate. How much can you afford a month? Oh, $500? Perfect. We got you. You're good. We used to do 4-year loans. Now for you especially, we'll make sure you get your car that you want, and we'll attach you to a 6-7 year loan, and we got you. Now, when those people come back to sell, and their 2017 BMW is worth $3-4 grand, and they still owe $12,000 on their BMW 3 Series, what do you think they're going to do? And that is I'm lying to you not, the majority of sales that happened in the car market industry from 2020 during the COVID crash for 2 years. And it's still happening today. But here is the big knocker. How the used car market, which is the biggest market in the United States, I'm not sure about outside the United States because I didn't buy cars outside the United States, but in the United States, how the used car market goes is they get their cars, when they go to the auction, they get it from a lease company. So BMW, there's a lease BMW lane, there's a lease Chevy lane, a lease Ford lane, a lease Tesla lane. Like all the people leases, off lease, people buy new cars every 4 years because they want to have the nicest and newest things. So they buy the cars every 4 years. So then the people that don't want a new car, they buy the off lease people's cars. So that's kind of how it works. You go to the auctions and it just goes in, and it's just thousands of cars constantly going down 40 different lanes, and you're running down bidding on cars. Well, here's the thing. In 2020, COVID happened and there were no new cars coming into the business. 2021, same thing. Now we're starting to see a little difference. All these cars that hit the market, and everyone's like, yeah, cars cheap, it's going to get a little cheaper. The cars are going to get down. Okay, that's fine. It's going to be a nice little celebration. Everyone's going to be able to get cars a little cheaper. That's good. But guess what? 2020 and 2021, there was no cars coming into America. The world was shut down. China parts were all messed up. And there were airport lots full of Chevy Suburbans, Ford Escalades, everything you can name was just sitting on the lots because they needed one little chip for them to work and be regulated to U.S. standards. Those cars hit the market in 2024, 2025. Remember, 4-year leases, 3 to 4 year leases, so maybe 2023. I do think there's going to be a delay to it. and there's going to be nothing to buy for the used car industry. Nothing, because there's 2 years of no cars coming in the system. So when people can't go to work, what happens? When public transportation is too crazy,
ride a bike.
You know damn well Americans are way too lazy to ride some damn
fat
bike.
Americans. Get a bike.
You know damn well that's not happening. So you have this scenario that lines up perfectly with the industry that we are in right now, called the Bitcoin halving in 2024. I do think there will be a bull market, and that's why I say take your profits, because I do believe that when that happens, it's going to be delayed. You know, the U.S. government's going to do what they're going to say. Everything's fine. We're going to bail out these companies. Everything's good. Blah, blah, blah. Banks are fine. It's okay. It's okay. You know, and there's no issue. Then the housing market happens because nobody can't pay their bills. So there's not going to be any renties. There's not going to be any of that. They can't go to work. There's no cars. And there's going to be a section that people are going to get screwed. So that's how I envision and see it going out. I see the government going to push the market back up falsely. I do still see a bull market because everything's going to be good. Everything's going to be dandy. America, guess what? We're still the best. Blah, 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 blah. We're the greatest. We're this, we're that. The markets are going up. See, I told you everything would be okay. But nobody is seeing the delay that happened in 2020 and 2021.
I agree. I just think that the unaffordability of mortgages has front run, is going to front run the unaffordability of, as in for the same reasons that it would crash, as in not being able to afford the finance. I think that it's the hiking, you know, there's going to be another, I think the futures markets on treasuries were pricing in a 97% chance of a 75 basis points hike in November. So like after that, you know, it's just going to get more and more expensive for any sort of debt. So defaults are inevitable. In fact, defaults are a part of our financial system. Like it functions that somebody at some point will be bankrupted. That is how the system works.
Crazy.
Yeah, it's not the
so
system,
crazy.
Yeah, the system isn't fraudulent. Fraudulency and fraud is the system. That's how it works.
Yeah.
But yeah, I've done my standard procedures of giving everybody depression on. And it's only early for you guys.
I'm so depressed after hearing 𝗖𝗓𝗡𝗧 talk about cars and Dom's talk about mortgages in the market. Ian, you got any good news for me, man?
Yeah, we might as well show the listeners how to make some money and maybe give that ape of the day soon. Something positive.
Bitcoin's sitting at 19.1 right now.
That's positive. I like that.
That's bullish, man.
I like the idea of the ape of the day,
I'm
but
so bullish.
𝗖𝗓𝗡𝗧 told me, he said once we hit 150 likes, we'll get there. We have 240 people in here. We're at about 110 likes. So if you haven't yet, make sure to go smash that like button, and we're going to be doing the ape of the day very, very soon. Dom, I know we also wanted to talk about the most recent proposal for VEMP and 𝗧𝗡. Let's go ahead and dive into that now. Is this proposal number 3 for VEMP and 𝗧𝗡?
I believe so. Funnily enough, I was in Positano. I was away, and then I landed, and I saw somebody. In fact, I haven't even literally been back to back in meetings. The same thing that happens whenever you're away. Like, it just gets so busy when you're back. But somebody put a VEMP proposal up on 𝗧𝗡. So it wasn't
you. It wasn't you.
Oh no, it wasn't me.
And how do we find it? I know I have these tabs pulled up. These are the closed proposals, huh? Pending proposals.
Yeah, we should.
Come on, Jake. You should know this.
Should be up
100%.
Jake, you should know this.
So
Come
good,
on,
eh?
bro. What are you doing,
But if you click on it, it should say who put it up.
Crypto Cyberwolf.
Crypto Cyberwolf.
What we are proposing a simple swap from 𝗧𝗡 into VEMP. and then hold until the price reaches a 2x or 3x over the buy price, so 2 cents to 6 cents. How this will work, the swap will be done in a way to minimize any impact on the Colt chart / price once the swap is complete. Why should we do this with VEMP? VEMP is a close partner of Colt DAO and is also a very promising project. Their dev sometimes does some depressing news on the Jake Gagan show, but we look over that. The current prices are far below our original buy prices. The current prices are far below our original buy prices, so we can take advantage of this DCA in over our 2 other previous buys. Who and which wallet? The funds will be sent to a multi-sig. So
some people
that
think
is
it's
why.
me.
Yeah, I mean the
Crypto Cyberwolf probably is you.
They think it's me.
It would make sense. You're very bullish on VEMP. You have a lot of Colt. I don't think you're guarding yet. It probably is you.
But I think well, the benefit is that like yeah, I mean because it's not just buying into any token. Since you do well, since I'm docs, like we can do a token swap, as in like send me the Colt, I'll just stake it with the rest of my Colt and I'll send the VEMP back. Neither of us have any sell pressure.
Just swap.
Just literally just swap them. So yeah, if it passes, then more than happy to do it that way. That way Colt doesn't get any sell pressure on the chart, and I'll just put it into the staking with the rest of my bag.
Yeah, it seems to be a little like half community like loves it, half don't, because it's our 3rd one. I'm a fan of if you find yourself a banger, put as much money as you can into it as possible, instead of diversifying and not knowing, you know, what the next one does. So I'm a fan of it. You know, we've got what 80 something in the treasury, 86 ETH in the treasury. Like, why not? If you got bangers like that are sitting low and you know the future of it, why wouldn't you? Smart.
Yeah. So thanks, Crypto Cyberwolf, whoever he may be, if he's on this call. But,
we're gonna get the rumors going. Like,
I think there's enough, isn't there? Like, how many anonymous cult people are there right now?
I'm like the doxed anonymous guy.
Crikey, yeah, I'm everywhere. There we go. But yeah,
I missed that. My dog was barking, so I had to go in there and let him know who the boss was because he was being annoying. But so real quick on this. So is this approved? Are we still waiting on it? Did it get? It looks like 100% approval. Or are we waiting? Like what's the timeline?
No, you got some days left. You're not in there. So here, I'll let you know.
Is PDO finance paid finance from 𝗖𝗓𝗡𝗖𝗧?
No.
I love. He gets so annoyed. I should say, it's like 𝗪𝗪𝗪𝗪 again.
How do we say his name? How do you say his name?
Just say it's like it's French, so it's got the little
𝗖𝗓𝗡𝗖𝗧. Remember that was the best. We didn't clip that up. I was like yeah, and it's on Huobi, and B-Roots is like Huobi.
But yeah, so I think it was put up yesterday, so it will end in 4 days. PDO Finance was, in fact, I actually submitted that proposal. That is done by, I think you're now talking to, I introduced you to the guy from, now I don't know the name, like 𝗪𝗏𝗡𝗏 Finance is like the body, like the organization or protocol, I guess, and this is their new token, and it's essentially a what do they call it? The something shield, a dumper shield. So it's done to give liquidity to protocols that want to raise funds after their token is live. It's complicated, but definitely check it out. You can go into the Discord, Colt Discord right now, and all of the information and all of the links are in there. But yeah, it's a way to like maximize liquidity. The devs are very, very clever. Well-known team, like it's got everything going for it, and that they haven't taken any VC funding on it either. So this is a very exclusive deal to Colt that they've managed to sort for them. So it should do very well. But yeah, I think paid network is going up soon. They had an AMA the other day.
Yeah, I was in there. We should maybe have him on, 𝗖𝗓𝗡𝗖𝗧. I'll say his name correctly. Maybe next Tuesday he can come on and talk about it, because I want to like start doing more, talk about more Colt proposals Obviously, the one that you for VEMP and the one you submitted are probably going to be gone by next week, but maybe we can get them on, chat about it, get B-Roots on here, get some other Guardians on, start doing some cult talks in the mornings.
Yeah.
I'll get a message sent over and chase him, but he's got a habit of. I got in trouble with him last time because I said to him he always ignores my messages, and there was one sitting in his inbox from like 30 days ago. Bloody hell!
You gotta chase 𝗖𝗓𝗧𝗧.
Exactly, I got to chase Kyle Chase, who I used to call him Kyle Chase all the time. I learned, but yeah, it's the little what do they call it? Little apostrophe over the E, which means you go A at the end.
Yeah, his project sounds very interesting, but it looks like you guys are good. So do you have to be a Guardian to see the behind the scenes of like how many votes, who's voting, stuff like that?
No. I think you just need to connect your MetaMask.
Yeah, you're not connected. It's 1 day. It's 1 day and 10 hours left. CJ, I'm connected 24/7.
Well, this is my streaming computer. There's no crypto or even a MetaMask on this computer.
So proposal for PDO finance has 33 billion. Where rejected, it is 166 million. So I don't think that's gonna pass with flying colors. Proposal 149 VEMP is 385 million. So there's not a lot of votes on that yet. What I noticed, what a lot of people like to do is try to like, oh, I'm going to like it's eBay or something. Like last 5 minutes, gotcha, like like
gotcha, bitch.
You either have it or you don't. You're gonna vote or not, so it doesn't matter.
Oh, actually, you know what? A lot of it as well is that it's gasless voting now, isn't it?
Yeah.
And I think that it all has to be like submitted in like batches. So I think that it will like jump up.
Yeah.
At those times, but
so a lot of people probably aren't even voting if they can vote, just because it's gasless.
Yeah, if they have that option, I guess. Why would you pay yourself? But yeah,
102 proposals funded, $1.7 million funded. That proof of means one was one that
proof of means is sitting on 100. Probably it was 149 ETH yesterday.
That's insane though. Like that's why that's why I'm bullish on Cult though. It's like the fact that you put 13 ETH. I don't think it's updated, right? Or is it?
No. Further down. Next one down. You can tell I look at this stuff a lot.
You're fucking on this at all times. Exactly. Here it is. So 13 ETH. Does it show you how much it's worth, or it's not that?
Yeah. If you scroll to the right, but I don't even think that one's it.
And just to preference that proof of memes just got listed on MEXC Global.
That's big
today, and they've been out for a month, and they're getting listed on a top 10 layer 1 exchange. And next week drops the mainnet.
Scroll over.
Are we bullish on proof of memes?
Dude, we're so bullish, bro.
Holy shit! 13 ETH to 100. Okay, so it has it all tracked out. 13 ETH to 194 ETH. That is such a win. That's ridiculous. That probably could have been me if I just listened to 𝗪𝗧𝗛𝗧 alpha, but I faded the project so hard. But 13 ETH to 194. Is that the best proposal that's passed so far to date?
By far.
There's a 57
ETH. I mean, in the end, like you've got a ton of different proposals. Even the one that's only 5 ETH is still a win.
Yeah.
You know, it looks bad because it's like, man, you just freaking went 13 ETH to 5 ETH, but that's still 5 ETH of a buy and back.
Wait, is this a profit or is this just a total?
That's the profit or
it's 5 ETH profit, or you turn 13 ETH into 5 ETH
or a loss, because you got to look at the left where it says total allocation. You know, if you got, for example, that one has 52 ETH is now worth 57 ETH. You know, we put in 52 ETH worth, now it's worth 57 ETH, so we have a profit of 11%.
Where do you see the 57 ETH here?
To the right.
52.
You see where it says look already to the right. It says current value.
Yeah, 46.9. That's you thought.
You see where it says current value?
Yeah,
that's how much the ETH is worth right now if you were to sell everything.
Oh, you're talking about this one. Sorry, you said 52 to 52 to 57. So there's
correct.
Okay,
correct.
So you turn 52 ETH into 57.
57 ETH, yes.
Okay, that's still the
win. So no matter what, that 52 ETH is still a plus for Cult. So even if it was just 52 ETH, like, all right, let's take it out and take it out. That's still a 52 ETH buyback and burn that came from.
Who the hell put in the 𝗪𝗧𝗛𝗧 proposal? We need to have a talk with that Guardian. The 𝗪𝗧𝗛𝗧 proposal, guys. We Cult DAO put in 13 ETH and it's now down 55%.
Oh, well,
Should we chat with them?
You can't win them all, Jake.
That's a pretty good good performance. As in,
Dom's like, it was me. No, I'm just saying.
I know, my first one was BDO, so not. But I mean, yeah, you got to look at these have been allocating for like 10 months or so. Markets
of course.
down.
I'm just giving them shit. And last thing before we get into the ape of the day, guys, as I said, you can see it on the bottom ticker, 150 likes for the ape of the day. It's coming from 𝗪𝗓𝗓𝗧. And I think Ian said it best. Let's pull up Ian's tweet again. I want to read this out to people at home. Look, there's no promises. There's no guarantees. But Ian tweeted this out. Ian Heinich, UFC Top 20, said, last time we called the ape of the day, went from a 200,000 market cap up to an 85 million. We're about to call another ape of the day sender. So make sure to get to us to 150 likes. If you haven't smashed the like button, go ahead and smash it. And the final thing that I want to discuss here before that ape of the day, our favorite lady over here in America, Ian has a big crush on her. Very, very big crush on her. He literally sends me pictures like she's the most beautiful lady in the world. Our Treasury Secretary Janet Yellen says it is certainly worth getting involved in developing a CBDC. Ian, since this is your crush, let me take that to you. What are your thoughts on that, man? Developing a central bank digital currency in America, good or bad?
I mean, we knew it's coming. You know, they're going to try to make their own crypto. They're going to try to devalue all the real crypto that's out right now. And I mean, we know it's coming. So like 𝗪𝗓𝗓𝗧 said, we got one, maybe two cycles, and then things are going to be different. Put it that way. I don't know if it's going to be dead, but it's going to be different. It won't be dead. There'll always be crypto, but they're going to try to make it more centralized, and they're going to try to control it. That's what they do.
Dom, your thoughts?
It's the worst. It's the worst idea in the world. But it's just a power play again. Like the digital yuan already in China.
Exactly.
Send out drones with cameras on them, and if people are outside of their homes during a lockdown, they take the money directly from their bank account.
Fuck
it's like
that.
Ultimate authoritarian.
Fuck that.
Control. Exactly. So yeah, like there is nobody who should like. I think originally back in the day, people would see that as bullish news that the government's getting involved in crypto. Wow, it's like developing. But I think the actual realization since like COVID and you know, all of the forced mandates, you know, passports and tracking everybody everywhere. Now it's not bullish whatsoever because it's effectively taking away all of your freedom. It's basically if you're an enemy of the state, they can stop you from eating, paying bills, your rent. You can have no control. Like if your bank says, you need to pay your mortgage, but the government's frozen your money because they own and have control and can blacklist you, then you default on everything. Credit rating goes, you can't get any loans. It's it's proper Big Brother. Like there is no good reason for it whatsoever. It is just, you know, power corrupts, and they will not be able to help themselves. If they can do it, they will do it. So Justin Trudeau, like you know, putting like the Terrorism Act in force for like a bunch of like truckers like protesting. If they have the ability to do something, even if it's completely outside of their remit, they'll find a way to do it because it's the ultimate power move. You know, power is the means to power. It doesn't serve a purpose besides that. People who have power will use it just because they enjoy the power. There doesn't have to be a reason for it. They will just do everything that they have to be powerful. So it's the worst idea in the world.
I agree. I'm for the government getting involved in crypto. Sure, buy Bitcoin, buy the cryptos that are out, even support the decentralized, although they're kind of centralized. The USDCs are somewhat centralized, right? In a sense, but they're not owned by the government. But get involved. But I do not support a central bank digital currency. Just look at China. They're kind of showing us what the future will look like. Like Dom said, it's like you act out against the state, they can fine you. They can shut off your bank account. You say some wrong things, you tweet some wrong things, they can take your money away instantly. So
not something. Kanye West today, didn't it? He didn't Kanye West get
JP Morgan Chase. They said, hey, you got to move your assets. We're not gonna hold your money.
And that's light compared to what the government could do and what they're doing in China, right? Like they didn't take his money away, they didn't block his money. They just said, "Hey, we're giving you a month."
Yeah, but
to
this
take
is
your
America,
brand.
Jake.
They would never do that.
This is
because
America.
There'd be so much like
It'd
just
be
it
a
would get
civil
crazy.
war.
It would get crazy.
Yeah, but you
They
don't
wouldn't have done that before COVID. There's no way in hell that they would have the audacity to.
It's scary,
Yeah.
dude. Now it's accepted. It happened with Andrew Tate. They froze his bank accounts. They kicked him off the internet, and now they're just doing it to people that speak out, like Andrew Tate, very outspoken. Kanye West, very outspoken, going on Fox News. What do they say? You can't bank with us. But that's why we need leaders in this country, other banks, if there are any out there, right? Like Rumble offered Andrew Tate and signed Andrew Tate to come on his platform. We need banks to say, hey, Kanye, Chase screwed you. Come over here, bank for free, and we'll host you, right? Like we need other people to speak out against the mainstream corporate shit that's going on, the corruption in America, and we need powerful companies to do so.
We need Ron DeSantis as president.
Unfortunately, all of the banks are in bed together.
I'm running for president.
Yeah, they are.
I'm going to come over to America, and I'm going to.
I'm going to London. I'm going to go to Dom. I'm going to just go sit behind his computer and see when he buys ETH and copy trade them.
I'll go find me on a private island somewhere.
Yeah, I might go to Puerto Rico. Puerto Rico's the way.